Hello folks, this is Bob Bruce from Integrity Wealth Consulting with a special video update about the recent stock market volatility. Stock markets around the world experienced a sharp pullback and severe volatility on fears about how a slowing Chinese economy might affect the global economic outlook. Those stocks gained some ground as investors took opportunity to pick up some bargains. Markets continued their losses throughout the last couple of days, pushing the S&P 500 and Dow into correction territory. And let's talk about what's behind those recent market movements. One, stocks have been trading near historic highs for months, in fact years. A pullback was all but guaranteed and is a very normal part of market cycles. While I don't want to minimize what happened, I want you to understand that the markets do naturally go up and down through cycles. Two, emotion took over for many investors. The opposing emotions of fear and greed are putting stocks all over the map. When markets take a dive, savvy investors watch and wait for opportunities to snap up good deals. Three, fears about China are probably overrated. A number of fresh economic reports out of China triggered dire warnings about the state of the Chinese economy. Should you be worried? Well, let's put China in perspective. Exports to China are worth 0.7% of the U.S. GDP. Even if China slips into recession, it's definitely not going to be the end of the world. Some U.S. companies that sell a lot of goods in China may feel a bit of a pinch, but most of the U.S. growth is driven by what we consume here at home. So how long will the pullback last? No one knows for sure, but it's probably not a repeat of 2008. The financial crisis was driven by fundamental factors like a housing market crash and the ensuing mortgage meltdown. We can say that fundamentally for U.S. stocks, everything remains positive. Now here's what we're looking at. The labor markets have gained jobs steadily over the last 65 months. Though wage growth is still tepid, we see major improvement in this major driver of economic growth. Consumer confidence spiked to its highest level in 7 months in August, showing that Americans are upbeat about the economy. The housing market is picking up steam, indicating that all those new jobs are giving many Americans the confidence they need to buy a house. So what's the takeaway? Keep calm and carry on. Focus on your own goals. While it's stressful to see portfolio values swing so wildly, the data behind the recent volatility does not indicate any fundamental reasons to really worry. Go outside, take a walk, play some golf, just enjoy yourself. Keep a very close eye on your personal life. We'll keep a close eye on the markets, and if you have any questions, of course, call us. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 724-940-9060. We're always happy to hear from you. While we believe this information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.